What's good everyone, welcome to video 4 of my bootcamp on my YouTube channel. And in this video I'm going to give you guys a personal approach and a personal model that you can use in your trading, and it will come together with everything that you have been learning. To this video I hope you guys have found my free course helpful in your trading, and I'm going off the feedback that I've received and a lot of you guys have found it insightful. So I want to say a huge thank you to everyone listening right now and who has made it this far into the video. So before we get into the model that I am going to teach, so firstly we're going to go over the type of trader I am, the approach that I have to the markets, and also I'm going to teach you guys where to place your stop losses, because this is the #1 question I get asked all the time: where am I placing my stop losses? So I hope that section will minimize some of the losses you guys are taking. And last but not least, I'm going to give you guys a risk management procedure that you can take to funding challenges. As I know majority of my following are prop firm traders, so I thought it would be fitting to go over a prop firm approach to the market, and you can utilize my model when you take these challenges if you would like. And towards the end of the video I am going to teach my model, and video 5 is going to be a special video where I bring on special guest traders that will talk about their journey and tell you guys some insights about the market. And if you have any guesses who you think it might be, leave a comment down below. Okay, so let's get into the video itself. The type of trader I am, if we go back to video 4, this was the key understanding to the market, knowing which kind of trader you are. So I am a day trader. I like to position myself on the hourly and 15-minute chart, and my trade durations is usually more than 2 hours. However, it can be less, as I like to scalp in the market as well. So I dip in between scalping and day trading. However, I like to stick to day trading when I'm trading Forex. So going back to the type of trader I am, I also trade market maker models. So every single one of my trade breakdowns, or every single one of my trades that I have showed you guys, is based off a market maker framework. And the market maker models, I have a bonus video that is coming out on T-Trade's channel that will go over market maker models in much more depth. That will be coming out once my bootcamp finishes, and it will come out after video 5. And that will be on T-Trade's channel, and I will leave a link to that in the description. However, every single one of my trades is based off a market maker model framework, and we are going to get into that. And we are going to get into that on the stop loss section of this video. Okay, so now let's get into where you guys should be placing your stop losses and where I place mine. I feel like this topic is not talked enough. This is because majority of the people that you're listening to, most of them don't trade. If we look at this fractal, we have buy side liquidity above this high. This is what we took out, and we have sell side liquidity right here. So this was a market maker sell model, and this was the buy side of the curve, and this was the sell side of the curve, where we took out the sell side, which was right here, and we took the buy side out, which was right here. So where should you place your stop loss in this fractal? So if we are trading the sell side of the curve, you want to place your stop losses at intermediate term highs and long-term highs. So what is a long-term high? You can see right here where price had a reversal, we traded above this short-term high. As we traded above this short-term high, we traded lower, and we traded below this low. As we traded below this low, we broke market structure, and then we traded into this fair value gap. As we traded into this fair value gap, we made a short-term high, which was right here, which was this green candle. So we had a short-term high to the left and a short-term high to the right. Right in the middle, this is our long-term high, and this is the smart money reversal. And this is 9 times out of 10 the safest area to place your stop loss. So if you place a short position, you wanted to sell inside of this fair value gap, your stop loss would go above this candle right here, and you would target the sell side, which is right here. The safest area to place your stop loss in this fractal is the long-term high. So if you miss this entry where price goes into this fair value gap and we sell off, and you missed placing your stop loss above the long-term high, we have another opportunity which is formed right here. If we look, we trade into this fair value gap. So this is another area that we can look to sell from. And you can see we have a consolidation inside of this fair value gap. And we make this high. This is a short-term high, and we make this high right here. So this becomes an intermediate term high once we make this short-term high right here. But once we see this, a short-term high, an intermediate term high, and then another short-term high right here, you can sell short right here, and your stop loss can go above this intermediate term high. and you can target the sell side liquidity, which is resting right here. In my trading, this is all I'm doing. I'm always looking to place my stop losses at intermediate term highs and long term highs when we are bearish. If we look at the buy side of the curve, as most of you know, I am a distribution trader. I don't care for the smart money reversal. I don't care for catching highs and lows. I just want to get the safest entry and make the most money. And that's what I do from trading distribution. So if we look at the buy side of the curve, we have this low right here and this low right here. We trade back into this fair value gap. And this is our short-term low that we make. This is where we can look to buy. And our stop loss goes below the intermediate term low. And we can aim for a 1 to 2, or we can aim for the liquidity which is resting right here, which we take out. And this was a 1 to 2 position. So when we are bullish, I'm looking for intermediate term lows to place my stop losses and long-term lows to place my stop loss. When we are bearish, I'm looking for intermediate term highs and long-term highs to place my stop loss. So this is all I'm doing, and this is one of the best ways to place your stop losses market structure wise. And if you want to backtest this, I would recommend you do so and look for intermediate term highs and long term highs for stop loss placements, and long term lows and intermediate term lows for stop loss placements as well. So this will stop you guys from getting stopped out prematurely before price moves higher, and this will also stop you guys from entering the market too early. Okay, so we spoke about the type of trader I am, and we spoke about stop loss placements. Now we are going to go over a risk management approach to funding challenges. Okay, so this is my approach to funding challenges, and what works for me might not for you guys, but this is what has worked for me and I'm going to show you guys. So what do you do for phase 1? So you want to look for a funding challenges which has a phase 1 of 8%. This is because 8% is easier to hit than 10%, of course. So once you find a funding company which offers a challenge for 8%, this is what you will take, and this is how you will pass it. My approach to phase 1 is you'll risk 2% of the starting balance, and you will aim for a 1 to 2. So this is the risk to reward that you're aiming for, and this will equal to a 4% gain. So once you've had that winning trade, you will then risk another 2%, and you will aim for a 1 to 2. So this is another 4% made, and this is the account passed in 2 trades. So winning the trades is great, so you've won the 2 trades and the account's passed. So what happens if you take a loss of 2%? So you're down 2% right now. So your risk is now halved to 1%. So you only have 3 shots of risking 1% to get a 3% gain. So you have 3 chances of risking 1%. If you go below 5% in drawdown, your risk is halved to 0.5%. So you will be trying to get above 5% in drawdown. Once you do that, you can then look to risk 1% again, and once you get above the starting balance, you can risk 2% and aim for this. So this is the approach to phase 1. Let's go over phase 2. So the phase 2 approach is very simple because your profit target is 5%. So you want to look for firms which offer a phase 1, which is 8% profit target, and phase 2, which is 5%. So to achieve this, you want to risk 2% of your starting balance when you get the account. And once you risk 2%, you are aiming for a 1 to 3. So this equals to 6% made. So obviously you can close the position as you get into 5%. So with the 1 to 3, you'll pass the account in 1 trade because you have made a 6% return. So if you took a loss on your first trade, you will follow the losing procedure that I spoke about before, where your risk is halved to 1% and you will follow the 3 shots rule. And if you go below 5% in drawdown, your risk is halved again and you're trying to work your way out. And then when you get over to the funded stage and you have passed, you're not risking 2% again, you're risking 0.5. You risk 0.5 and you aim for a 1 to 1 or a 1 to 2 and you secure your payout. Once you have secured the payout, the account is risk free, so you can trade it however you want, and however much you want to risk you can do, because you've been refunded the challenge fee and you've got your first payout. So this was my approach to taking funding challenges. I'm going to show you guys a few graphics, and there will be a link to the graphics in the description down below as well. Okay, so this is the graphic of phase 1. So you're risking 2% and you're aiming for a 1 to 2. If you take a loss, the risk is halved to 1%. So you have 3 shots of risking 1%. If your balance drops below 5%, then you're risking 0.5%. So if you win the trade, you're up 2%. So you have 2 shots essentially of risking 2%. So if you take a loss, you're back down to break even and you can risk 2% again. If you take a win and you aim for a 1 to 2, you've passed the account. And as you can see, you risk 2%, you win, next trade is 2%, and you aim for a 2R and you've won that. So this is phase 1 passed. Let's look at phase 2. So phase 2, your profit target is 5%, you're risking 2%, and you're aiming for a 3R. So if you win that trade, you have passed the account. If you lose, you will follow the losing procedure, which was shown in the first diagram. So this was the first section of video 4, where I gave you guys insight about me as a trader and what I like to look for in the market and where I place my stop losses. And with the approach I gave you, this is the most secure way to place your stop losses inside of the market. And I've also given you guys an approach to taking funding challenges. So this bootcamp as a whole is better than many paid courses out there. So I could have easily charged for this course because I know the value it's worth. However, I gave it all you guys for free and I hope you are finding value in it. The second part of this video, I'm going to teach you guys a personal model. So without further ado, let's get into it. Okay, so this part of the video, I'm going to teach you guys my PM session model. This model is applied on NASDAQ and S&P, and you can use it on the YM. If you guys don't know what the YM is, it's the Dow Jones. However, I do prefer to use it on the NASDAQ and S&P. So I don't have a name for this model, but if you guys want to leave a comment down below, and if you have any suggestions, I'm more than happy to name it whatever, whichever comment has the most likes. Now this is not the first model that I've given out for free. I do have, including this one, I will have 4 free models on my YouTube channel alone. And one of them a lot of you guys have got funded from, and that is my previous NASDAQ model. And there will be a link to that on the screen right now, so you can go click on that video and watch it if you need. And I also have a Forex model on my channel as well, so you guys can utilize that as well. However, this is going to be a NASDAQ and S&P based model. If you guys have not got your notepad out or something to write this down, I would recommend you do so. So firstly, before we get into the video, I'm going to talk about the conditions that this model performs well in. There are 3 characteristics that we are utilizing. We're utilizing the lunch hour, we're utilizing 1 PM, and we are utilizing the previous session. So I'm going to write all of this out right now. Okay, so I wrote everything out and we are going to go into a bit of detail about previous session. So the previous session, we are looking for it to be either a consolidation. So this will be the AM session. So either we are looking for it to be a consolidation. However, if the AM session is a continuation, I'm going to teach you guys how to trade a continuation with this model as well. So these are the 2 main profiles that you're looking for this model to perform well. A consolidation in AM session, or if AM session is a trend in market. So once we have all of this in mind, the next step is crucial, and that is the lunch hour. The lunch hour starts from 12 PM and it goes on till 1 PM. So if we have a consolidation or a trend in the market in AM session, that's good, you've identified that. However, then you need to identify what the lunch hour did. So if the lunch hour, you are looking for it to be a consolidation, and you are looking for the consolidation to be around 100 points. If it goes above 150 to 200 points, you don't consider trading this model. So you're looking for 100 points consolidation. So this is the key. And this is the liquidity that we will be targeting. So there will be buy stops being built up in lunch and sell stops being built up in lunch. And if we had the 100 points consolidation, this is what we will utilize. And I will show you guys some examples. However, I'm just going over a diagram. Once you have these 2 coming together, which is either a consolidation profile in AM session or a trending session, we are looking at lunch hour. After lunch, we have 1 PM. As I told you guys in my Telegram group that I will be teaching more about opening prices this year, and this is one of the opening prices that we are going to get into. We have the 1 PM opening price. Now once we have this candle print on the 15-minute, you wait for the 15-minute candle to close. Once you have this candle print on the 15-minute, you wait for this candle to close. Wherever the opening price is on this candle, say we had an opening price right here, and this is the large wick we made, we will draw out the opening price. Anything below this opening price, this is where the algorithm is short-term oversold. And above the opening price, this is where we will look to sell. So we are looking to buy below the opening price of 1 PM, and we are looking to sell above the opening price of 1 PM. This all comes together if the lunch hour is a 100-point consolidation. So I do understand this might be a bit advanced for some of you guys, so if you do have any questions, make sure to leave them down below. But these are the 3 components of this model. So we are looking at the previous session, lunch hour, and 1 PM. And now we're going to go over some diagram examples, and I'm going to give you guys one example of this model. Then I want you guys to do some back testing and see what you've found, and make sure to tag me on Twitter so I can see what you have found trading this model. Okay, so if you look right here, this is an example of a consolidation in AM session. So we are just taking old lows and we are taking old highs and we are staying inside of this area. Once we stay inside of this area, 12 PM, this is what we look for. This is where the lunch hour starts. And then we will look for 1 PM. You want to see us start taking some kind of liquidity from the previous session. So if we're taking out this low, we can start consolidating like this as we get into 1 PM. And this is the opening price. So we will look on the 15-minute, we'll wait for the 15-minute candle to close. And if the opening price is like this, we will draw it out in time. And we are looking to sell above this and we are looking to buy below this. So throughout the lunch hour, we built up buy side liquidity above this, or we built up sell side liquidity below this. So if we are bullish, you want to see price trade up higher. We go into a short-term overbought and then we trade lower. We take out the sell side liquidity below this low and AM sessions low. Once we have taken out the sell side liquidity, we can now look to target the buy side liquidity. So this is where the high probability trades will come. We will look to target the lunch high, which is here, and AM session highs. And as price trades higher and we trade above the breaker, which formed right here, we will trade back into the breaker and fair value gap, and that's where we will long. So we will look to target the lunch highs and the highs made in AM session. And this is profile number 1 when price is inside of a consolidation. And now let's look at when price is trending. So when we have a trending market, when AM session is trading lower, this is what is happening. And then we go into the lunch hour, which starts at 12 and it finishes at 1 PM. So you can see price has been trending downwards and we have been making new lows. Once we see this, our attention goes between 12 to 1 PM and we are looking for 100 points consolidation again. And you want to see price just stay inside of here. Unlike the consolidation profile that we spoke about, you don't want to see it take any liquidity inside of AM session. So you just want to see it build up liquidity inside of the lunch hour. And then we have the 1 PM opening price. So for example, if price trades lower and we take out the sell side liquidity, which was resting below these lows. So we've gathered the sell stops, and which is the next area that we can look to target. That is the lunch hour highs. And we have this high right here. So these are low hanging fruit targets. And that's what I do prefer when I'm trading this model. So we wait for a breaker to form, price trades back into the breaker, and we look to target the buy side liquidity. So you are always waiting for one side of the liquidity to be taken. If no liquidity has been taken, you wait for one side to be taken. That is important. Because if you can't identify the liquidity, then 9 times out of 10, you are the liquidity. So this is profile number 2. Let's look at profile number 3. So profile number 3 is when we are continuing upwards and we are making new highs, like we are doing right here. And then we get into 12 PM. 12 PM to 1, you're looking for price to consolidate around 100 points, which we do right here. So we are taking no liquidity inside of here, we're just in a consolidation, and we are not taking any liquidity from AM session. Once you see this, you're waiting for the opening price. And if price trades higher and we take out the buy side liquidity at lunch, and if we take out the buy side liquidity in AM session, we will look for selling opportunities as we get back down lower, as we get below 1 PM open. We come back into the breaker and we are looking for selling opportunities to target the lows at lunch and the lows made here. So this is profile number 3. If you guys want to take a screenshot of all 3 profiles, you can. And let's go over one example. Here I'm going to give you guys one example, and I want you to go into the chart and find examples yourself, and make sure to tag me on Twitter so I can see what you have found from your own study. So this was an example from the 19th of April where we had the 9:30 open, price traded up higher, and we had a continuation lower. So this is one of the profiles where we have a trend in AM session. So say if you missed all of this, you're waiting for 12 PM. 12 PM to 1, this is where your attention is being drawn. All we do here is wait for the candles to print inside of 12 to 1 PM. Once we've had the price action print from 12 to 1 PM, we are looking for the range. So how much was this range? This was around 90 points. So this is perfect for the model to perform well. As you can see, I'm looking at the 5-minute chart. However, this is the opening price and price is trading above it. So where is the liquidity? We have liquidity above these highs and we have this fair value gap. So if price trades into here, we will look for selling opportunities inside of a breaker and we will look to target the lunch lows, as this is a continuation profile. So we are looking for price to trade into this fair value gap. So after the 5-minute chart, you can move on to the 1 minute. And all we're doing right now is waiting for price to trade into the purple shaded area. So we've taken out the buy side liquidity and we've traded into the fair value gap. And we are above the 1 PM opening price. So we will look for selling opportunities which form right here. So this fair value gap, which is formed right here, this is where we can look to sell. Our stop loss will go above this high and we will target the lunch lows. And then we will let price do its thing. So this was another opportunity that you could have sold from. And when we traded back into this up close candle, that's another area to sell. And as you can see, we've taken out the sell side liquidity and this trade was a 1 to 2. So this video I gave you insight about me and a personal model that you guys can use in your trading if you made it this far into the bootcamp. And the bonus video will be coming out soon. However, I do want you guys to study this model yourself and do some backtesting. And if you want to share your backtesting results, make sure to tag me on Twitter. And if you made it this far into my bootcamp, I want to say that you are part of the 10%. Because 90% that started this bootcamp, majority of them have left because they thought it was too much work or I've given out too much information and they don't want to dig into it themselves. And don't forget, I do have 2 bonus videos coming out soon. One of them is on T-Trade's channel where I go into market maker models and I give you a deep dive into them. Other than that, I want to thank you guys for watching this video and I hope you guys found it insightful. As always, thanks for watching.